I think one of the key things around market returns as we go into 2025 will be the degree to which earnings growth can continue at high levels. If we look at 24, we look at earnings growth in the US being 12%, 13%, 14%. In other words, expectations rising as we went through the year. Now in 25, we'll need to deliver on that. And then again, to see further growth as we move forward into 26. So I think earnings growth is going to be key in terms of supporting markets and market returns as we go into 25. I think some of the expectations with regards to interest rates and the pace at which they fall may be a little bit overstated. So maybe in the US, we won't see interest rates come down as far or as fast as people think. If we look at Europe, that's probably not so much the case because we see less economic growth within Europe. And so greater potential for interest rates to come down, particularly given that inflation is at or around, in some cases below, that critical 2%. If inflation were to tick up meaningfully, it may even mean that interest rates would have to rise as we move forward. And that is something that the central banks will want to avoid at almost any cost. If we look at the election of Trump to be the next president of the US, there are a couple of things which will be key there. On the one hand, the potential for lower taxes, both individually and at the corporate level. That should be supportive of markets. We would also look at regulation and maybe less regulation as we move forward. Traditionally, that has been a positive for markets as well. However, we would also look at the deficit. And if we look at taxes coming down, well, maybe we'll see taxes going up in certain areas as well with tariffs going up. But if we look at the fiscal deficit between 5 or 6% or so, that is unsustainable. I do believe that as we move forward, that is going to be an issue at some point. Now, whether that is in the first half of 25 or whether that's further out in 27, I think it's very difficult to judge that. But at some stage, that will become an issue. And I think that is something we need to keep our eyes focused upon. If we look geopolitically, I think the trade tensions in particular with China, are something which could be difficult for markets as we go through 2025. If you look at some of the potential tariff increases on China mostly, but also within Europe as well, potentially being imposed by the US, then that is something which could be unsettling in terms of trade and also in terms of inflation as well, price rises as we see those tariffs being imposed. And what happens in terms of the tit for tat as well? What are the repercussions there? I think that is something which geopolitically can be unsettling as we go into 2025.